Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandoilguy.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Crude prices slowly sliding down. Are they at some kind of a point where we might see a collapse?
We are pretty close to a point of collapse. We're testing a really critical point here, which is around the $42 to $43 per barrel mark. And, today we've got a kind of a washout type of low where we're having another big drop, and it's coming right down to this significant support area. And if it has a strong reversal, meaning it closes very strong by the end of the day or by the end of the week, those are going to be really bullish signs that we could see another really strong rally in crude oil going all the way from the current price around 43 all the way up into the 48, 49 area level. So pretty substantial potential upside. But of course, we need to see some type of reversal bounce off this level. And, we've got really low volume today, considering it's a big drop, down 2.5% or so into a major support zone. And so the big selling seems to have kind of come to an end. And we've seen this happen many times. Light volume typically kind of comes in at the last little bit, right near the top or right near a bottom. And you either get two different moves. You either get very strong volume, so a blow off top or bottom, or you actually have very light volume, and it indicates there's just no more interest. The selling in this case has dissipated, and nobody's willing to sell their position at support or to short crude oil at support. So, the odds here are looking like we're going to have some type of recovery by the end of the week in crude oil, and it could have a multi-week rally to the upside. That being said, if it closes strong and on the week below this more or less $43 per barrel mark, then we could be seeing $40 or $38 per barrel very quickly after that. It could be actually much lower. It's a major pattern that would be breaking down. We're looking at like a year-long pattern. So that would just be the start of a move. And we could go all the way back down, which I think we kind of mentioned in our last talk. We could go way back down into that 30 or the 27 mark where it bottomed out back in early 2016. So crude oil is here at a very critical point and very close to a potential setup to get long or a potential to get short if it has a very weak close by Friday.
I see August gasoline futures are down slightly. Whatever happened to the summer driving season?
Yeah, it may not just be in cars this year. Like the weather where we are, we're a big boating area, and I can tell you, I've got a friend who owns a boat shop, and the boat sales are dry as a bone. They're not selling anything, and the weather here has been terrible. And you know how boats are, massive gas guzzlers. And on my street, there's only two of us that have boats out. Typically, there are a whole bunch of boat lifts and boats on them, and people have been tubing and water skiing and wakeboarding for weeks already. And it's only myself and my one neighbor who've got our boats out yet just because of the weather. So, until boating season really kicks in here in Canada and we get some warmth, I think that'll be a big part of fuel consumption going forward.
Well, for people who aren't power boaters, they use a lot of gas, don't they?
They do. They're probably one of the least efficient ways of transportation. So, I took the kids and some friends tubing and water skiing and wakeboarding on Sunday, and I went through a 60-liter tank in a couple hours. And that's just on a wake sea-doo. So you can imagine these gas guzzlers. My friends have some big boats, and they're $1,000 worth of fuel just to go to the islands and back for a weekend trip. And they're burning hundreds and hundreds of liters for a fairly short trip. it's pretty crazy. So
that's why I'm glad I do sailboats instead. A whole lot cheaper on gas.
Exactly. I was born and raised on sailboats. I love anything with the wind, but just here, I have a quick little sea-doo, which goes against my grain of kind of being a sailor, but I need it for the kids because they love to go out tubing with their friends.
We'll have more with Chris Vermeulen right after the break.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're speaking with Chris Vermeulen. Chris, gold and silver, are they at a critical support level?
Yeah, if you take gold and silver and you use technical analysis, I use the Fibonacci extension, which more or less gives you an idea of where price is likely to go next based on its last kind of move, its momentum thrust. And both gold and silver, and actually even miners, they're all testing that critical measured move to the downside where they should be finding support pretty much today. If they do not find support, let's just take a quick look at where is gold trading right now. Gold is trading at 1243, more or less. It needs to hold above this 1246 level in order to kind of really, bottom out. We need to see, just like crude oil, we need to see a reversal, strong move up from here in the next day or two. And if that happens, then we're going to see gold have a nice multi-week probably bounce. But looking at what things are doing, like gold, silver miners, miners are underperforming. They're looking like they're about to break down this level and have a pretty substantial slide to the downside. And I think a lot of it has to do with last week we had the rates. And you look at the U.S. dollar, it's had a nice strong rebound, and it's at major multi-month support. The U.S. dollar, I've been talking about it for a couple of weeks here, is trying to put in a bottom, and once it starts to move to the upside, then we're going to see a lot of pressure on commodities, more specifically downside in gold and miners and silver, and that's what we're seeing. We've had a big 4-day pop in the dollar, and we're having a big move down in metals, and really the dollar is just getting started. I think it's got potential for a massive leg to the upside, and that could send gold and silver miners down to potentially December lows that we saw. And there's a long way to potentially slide, and I think it's going to catch a lot of traders off guard if the U.S. dollar does catch a bid and really rip to the upside here, because it's going to annihilate a lot of gains in people's precious metal plays.
What about the Canadian dollar?
Well, the Canadian dollar follows crude oil a lot. So obviously, if crude oil bounces here, which I think it's going to, then we're going to see the Canadian dollar kind of firm up and actually perform fairly well. That being said, if crude oil breaks down this week and closes down near the lows, then we're going to see the Canadian dollar continue to lose its value against other currencies in general.
Mm-hmm. What about higher interest rates here? Would that help support it?
Yeah, obviously higher interest rates support a currency because it means you make more money holding that currency. So it would definitely help kind of buffer that, but still you put the Canadian dollar, the loonie, up against the crude oil chart, and crude oil kind of has the ultimate weighting on it. It really pulls it around and drags it across the chart. So pretty much what crude oil is doing is kind of the key to follow where the Canadian dollar is headed.
Now, we have a federal government that wants us to get rid of crude oil. Aren't they shooting themselves in the foot then?
I believe so. I don't know what all these guys in control are doing, it doesn't make any sense. I don't know why we're not, taking more advantage of crude oil and really focusing on it versus trying to get rid of it. But who knows what people's agendas are? But it definitely wouldn't help the loonie.
I was going to say, how many oil wells or donkey pumps do you see in Toronto?
Yeah, exactly.
That just might explain why the bankers love the money the crude generates, but they don't seem to remember that without it, they don't have a business.
Yeah, exactly. It's a catch-22 also, because there's so many oil plays and oil companies that when oil is this price, they go out of business, and it can cost the bank, huge money in companies going under, which is a major problem. But of course, the banks aren't complaining when crude oil is screaming up in the hundreds and all that stuff. But right now we're on the flip side. Energy companies are probably damaging the bank's balance books. They're going to lose a lot of money with crude oil floating down here below this $50 mark.
And of course, on the West Coast, there's high social resistance to the Kinder Morgan pipeline being doubled from Edmonton to Burnaby.
Right, yeah.
People ready to chain themselves to whatever or throw themselves in front of excavators. You don't know what they're going to do. So even though technically they have approval for the project, if you have demonstrations and social unrest over it, maybe the pipeline will never be built.
Yeah, potentially. You never know. It's tough. Any of that development stuff in general is, you got a lot of hoops to jump through, and even if you make through them all, there's always something that pops up in the way that could, negate the approval or change it. So it's high risk stuff, all developing, creating new pipelines, properties, all those things.
We'll have more with Chris Vermeulen right after this.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Chris Vermeulen. Chris, how are commodities doing right now?
Commodities in general, they haven't been performing very well. Commodities have kind of been flatline or moving lower for the last year. And in the grand scheme of things, I think commodities are not the greatest play at this point. I do feel as though they will firm up in time, but I think with a potentially rising dollar here, I think we could continue to see commodities as a whole flounder and kind of drag out sideways here for, who knows, another 6, 8, 12 months. It's a, if you look at the long-term charts going all the way back to 2008 of kind of commodities, basket of commodities, we are down near some significant lows. We probably put a bottom in for commodities in general back in more or less late 2015, early 2016. And now we're kind of just fading down. They're just kind of out of interest right now. And that's part of a basing formation. And I think eventually here they're going to find a bid. And I think there's going to be a huge play in commodities because they've been in a bear market pretty much since 2011. So the time is coming when commodities will likely shine and be on fire. I just don't think it's going to be any time in the next couple months.
The stock markets, at least in the U.S., supported by the FANGs, there's 10 stocks, but really 5 that are holding up the whole market. Is that a sign of a dangerous equity market?
It is. It's really tough because those who are holding a whole bunch of average stocks, individual stocks, trying to pick their own, they're likely highly underperforming the overall broad market, simply because most stocks aren't trading higher. You look at the Russell 2000, it's been more or less trading sideways since December. And that's what the majority of people are holding, are these higher risk plays trying to outperform the market. But if you were to just stick with the big old basic large caps, of course, they continue to push to new highs. And with a handful of stocks lifting the market, yeah, it's definitely a warning sign. It adds a lot of fear for investors and traders, but you know the saying, the market climbs a wall of worry, and really, it could continue. It's scary because at any time we could get hit over the head, just like we saw in the NASDAQ last week, that massive drop in the NASDAQ. That could happen in any sector or any index at any time when some big money starts to distribute shares and unload their positions. So we're kind of tiptoeing up this hill, this mountain, exhausted, and then at any time, you could fall off a cliff or, completely go straight down for a couple of days and have a big flash crash type thing, and then it'll creep its way back up. So it is, difficult trading because risk in my opinion, is higher because it only takes a handful of stocks that can completely crush the market like what we saw in the NASDAQ.
Of course, they call it the FANGs, but Apple, I should say, Google is now known as Alphabet, and it's so if you go and substitute the letters, it says famine instead of FANG.
I haven't seen that, but that's good.
Yeah, well, famine, not famine. But still, maybe we should rearrange the letters, and actually I think it would be fun. If you recall the old TV show Faulty Towers, they did the same thing, scrambling the letters for every show, and my favorite title for the show instead of Faulty Towers was Flay Otters or Farty Towels.
Interesting.
Yeah, so always fun to scramble the letters. But apart from playing anagram games, what commodity do you think might be safe? Is wheat doing better than expected because there's been some trouble again in some places, too much rain this year? Wheat's had a nice run. It's been underperforming. It's been moving down for a long time. It's just been a terrible play. It's been selling off for years. But it has had a bid the last couple of weeks. It's had a really nice move up. It does have some volume moving into it, showing some support, but again, it's still making lower highs and lower lows, and right now it's trading at resistance. If it could break out of this downward trend here and start to make a new higher high on the chart, that would be the first sign of, potentially this downtrend coming to an end. But, it's had a nice bid, but it's still clearly in a downtrend, and until it can break out of that and show some good support, some good volume moving into it, once it can get above resistance, showing people are willing to pay a premium, then there might be some new little feeding frenzy, and we could see that unwind and really rip to the upside, but it's not there yet. Yes, and the disconnect between what you pay for a box of cereal in the grocery store and what farmers are getting for their product is huge.
Oh, yeah, it's crazy. It doesn't make any sense that, you see these prices of commodities at multi-year lows, yet our foods are at multi-year highs. There's massive disconnect. It's terrible.
And we've been told that meat prices are going to go up 9% this summer. So you've been hidden inside because of inclement weather for the most part. And by the time you hit the barbecue, you can't afford to buy the steak.
Yeah, you're looking at $20-$30 a steak. It's crazy. Yeah. It's the way it goes, though. It's nothing we can do about it. It's kind of always been like that, but it's just most people don't follow the actual commodity prices. There's a big kind of difference between them, obviously.
Well, the big reason that steak is so expensive is China is now a consumer country, and they have discovered that beef is damn tasty.
Yeah, there you go.
That's why there's such a big demand for it. It's not in North America, it's China, which 10 years ago would have beef once a year to celebrate New Year's. They can afford to eat it just about every day.
Yeah, well, it's my favorite. I love it. Makes sense. I could see that's a lot of mouths to feed, so there goes the supply.
Chris, thank you so much for being on the show.
Hey, always a pleasure, Jim. Thanks for having me.
My guest has been Chris Vermeulen, his website, thegoldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.